Huge news in the last day or two out of Seritage Growth Properties is that at the 2022 shareholder meeting, they intend to have shareholders vote on a proposal to liquidate 100% of the assets of Seritage Growth Properties and basically distribute the proceeds to shareholders. And 29.1% shareholder Eddie Lampert has already signed an agreement basically saying that he will vote in favour of this proposal, which means that a little over half of the remaining shareholders will need to vote in favour of the proposal to meet the minimum 2/3 shareholder approval required to go through with this liquidation process. Seritage Growth Properties for a long time has had this plan to basically go ahead and redevelop many of the key real estate assets originally spun out of Sears in order to increase the rent per square foot and also densify certain areas to increase the total leasable area on various real estate sites. And although they have shown progress in small areas of their real estate portfolio, the kind of dream of having a fully redeveloped portfolio still really hasn't arrived yet. And as a result, the stock price performance has been pretty poor since Seritage was initially spun out of Sears. For people that were able to purchase in at nice low prices like Monash Brai in 2020, buying in the kind of $5 to $7 range, the results have been pretty good, but nonetheless many people believe that Seritage still trades at a very significant discount to its net real estate asset value. And this news follows a March announcement from Seritage where they said they were basically doing a comprehensive review of strategic alternatives, which at the time people were kind of guessing about what exactly that meant. A lot of people thought it may mean selling Seritage to one individual buyer, but rather if they go through with this full 100% liquidation process, it looks like basically all of the real estate assets will hit the market. Maybe some of them will be sold in chunks, but it will provide a lot of flexibility for Seritage around having access to different types of buyers for different types of properties that sit in their portfolio. Now for the rest of the video, I want to cover some of the finer details that came out in the proxy materials alongside the press release that Seritage put out. And that proxy document includes some really key information for Seritage shareholders. It gives us actually some guidance on how much they think they can distribute to shareholders through a liquidation process. They also give some guidance on how long that they think that liquidation process might take. And later in the video, I also want to talk through some of the risks that still could, of course, come along with Seritage. They still have a lot of debt. There is kind of macro concerns about the real estate market more generally, and I want to talk through how that may impact Seritage as well. But for now, let's get straight into the details. And if you do enjoy this video or have thoughts around what Seritage are doing, definitely let me know down in the comments section below. Now, some of the key data points that came out in the proxy materials from Seritage, firstly, is the amount of cash that they think they can distribute to shareholders in a liquidation process. And that range that they gave was $18.50 a share to $29 per share. And at the time that news came out, Seritage was trading at something like $6. It's gone up a lot in the last 24 hours to more like about $10 or $11 today, but nonetheless it remains at a substantial discount to the proceeds that they think they can pay out if this is approved by shareholders. They also said that this is going to take some time if you think about it practically. Seritage owns about 160 properties at this point, and they estimate that after having shareholder approval, they expect the process to take probably about 18 to 30 months. And they actually said in the proxy documents that they actually already have about 50% of the value of all the Seritage assets already on the market, but they're looking to obviously push that to 100%, convert to sort of a liquidating entity from a legal perspective. That has some potential tax advantages for shareholders, but that is basically the plan and what they're looking to achieve here. Now that $18.50 to $29 range that Seritage gave us actually allows us to kind of work through and understand the assumptions that Seritage are working through here with how much cash they think they can pay out. That basically allows us to work out what they think their own assets are worth. And looking through some of the maths here, there are currently about 56 million shares outstanding at Seritage Growth Properties. So if they pay out $18.50 per share on the very low end, that is basically basically exactly about $1 billion cash paid out to shareholders. As of the last quarterly filing, Seritage still had about $1.44 billion in debt owed to Berkshire Hathaway. They had about $70 million in preferred stock, which basically implies that after some carrying costs, after paying a little more interest, after paying, the staff at Seritage, after paying investment bankers and commissions on selling these properties, after paying everything, they think they can get net proceeds from selling the assets before paying off debt and so on of about $2.52 billion by my maths. If we look at the $29 scenario, that basically pushes the implied asset value, at least after all of those costs, up to about $3.13 billion. Now, if we go back a few months and look at some of the valuations that I did personally, I was landing on closer to $4 billion in assets for Seritage in my theoretical liquidation value scenario, but that of course didn't include some of the costs that Seritage will have to pay as they work through this process, and it doesn't include the continued sort of interest payments that they will have to Berkshire Hathaway as they continue to pay down that debt before they presumably start making distributions to shareholders. Now, when I did that valuation work, I did actually go through a second scenario where I looked at Seritage continuing with the redevelopment projects that they kind of had put out there publicly, and in that scenario I actually did include some capital expenditures to develop those properties, but also a lot of these big annual debt payments that go to Berkshire Hathaway. They still have, like I say, about $1.4 billion or so in debt to Berkshire at a big fat 7% interest rate, so the annual interest payments on that debt are pretty substantial. And in that scenario that I did, I got to about a 2025 value with a more well-developed portfolio of more like about $32 per share, so that's starting to get much closer to the top end of the range that Seritage have given us here. So I think Seritage potentially have been somewhat conservative here. Either that or the asset values that I came up with are much higher than is realistic. But as I look through some of the recent sales that have gone through from Seritage, they've actually tended to align pretty well with some of the work that I did earlier on. For example, just in the last couple of days as well, we got some news that Seritage sold their Westminster Mall property in California for about $46 million. I had that comped at about $48 million, and with each individual property, with some I'm going to be a little high, some I'm going to be a little on the low side, but by and large, I seem to have landed approximately in the right ballpark. So that's not to say that I think Seritage are guaranteed to get right up at the top end of the range that they've given, but I do think there's a reasonable chance that we get kind of towards that end of the range. Only time will tell exactly how that plays out, but I'm really interested to see that if they do go through this liquidation process, just how much cash shareholders can squeeze out of this thing. Now, before we wrap this up, there are a couple of important things to understand when it comes to risks and what will actually stop this process from going through and working out successfully, and in which case shareholders would get more cash paid out over the next few years than the stock is currently selling for today. Now, the first thing, of course, is simply the shareholder vote. We need 2/3 approval for this process to go through. We already have, like I say, about 29% approval just purely from the biggest shareholder, which is Eddie Lampert, so that gets us a good amount of the way there. After reading through what Seritage are looking to do and the price ranges that they've given, I will likely vote my shares in favor of this as well. That's not me telling you to do that with your shares, but that's kind of the view that I have at the moment when it comes to the shareholder vote. So that is the first thing that needs to get across the line. The interesting thing that Seritage has kind of laid out as they will start to work through a liquidation process is how they're thinking about capital allocation. Now, reading between the lines with the documents that were put out, it seems that Seritage are going to prioritize debt repayment and retiring their preferred shares when they start to get some cash coming in the door from selling some of these assets. So I expect that we'll see the $600 million or so of debt due in July next year be kind of the first thing on the hit list. After that, again, we'll continue to see the debt repaid all the way down to zero, in theory, eventually, and we'll see the preferred shares retired. That seems to be kind of the game plan for Seritage before they start making really big distributions. Now, besides simply the time taken to go through a liquidation process, there are other reasons that Seritage, in share price terms at least, won't just leap up to somewhere in that $18 to $29 range. There are risks that can potentially hold shareholders back from getting that full amount of cash in their hands. Now, the first one that comes to mind is simply just macro concern. Obviously, we're in an environment where interest rates have been going up, which is not particularly good for real estate asset values, so that's something to keep in mind. Seritage have quite a wide range also of quality in their portfolio. They have some really high-class properties that I'm sure are very liquid assets, but they also have a lot of lower quality properties where admittedly less of the value probably lies, at least on a per property basis, but they are potentially going to be more challenging to liquidate and actually get some cash for. So those are a few things to keep in mind. And then the other thing that has kind of hovered over Seritage for a long time and remains there is this litigation that has been going on for years now with Sears. Now, the final thing that I want to touch on here, either if you're an existing Seritage shareholder or if you're just trying to learn something about this potential special situation opportunity, again, just trying to give you the facts here. This isn't trying to get anyone to buy or sell or anything like that. But the final thing that I would really do some digging on for your individual situation would basically be around tax. Now, the idea here is that basically Seritage want to obviously liquidate all their assets and basically just pay big cash payments out to shareholders. And the treatment of those payments from a tax perspective is going to be quite impactful potentially on your return. Now, if you happen to be a US-based investor, Seritage actually laid out what the rules typically look like for US shareholders with a liquidating company. Basically, they went through and said, and I'll put a screenshot up here, that any distributions that come from Seritage up until your cost basis, so if, for example, your cost basis is 10 and over a period of time Seritage pays out $10 in cash to shareholders, all of that will tend to be tax-free income. It's treated as a distribution from a liquidating company rather than a traditional dividend that you might pay tax on, but anything over and above your cost basis would basically be treated as capital gains and would be, obviously subject to capital gains tax. So that is the US situation, but obviously investors from all around the world tend to invest in US markets. So I don't have tax advice. I'm not a tax advisor of any kind. But the thing that I would just say is if you are a US investor or if you're a non-US investor, it would be really, really important to do some digging, talk to your accountant, read up as much as you can on exactly what the tax treatment might look like from those big distributions that may potentially come out of Seritage down the track if they can go through, get shareholder approval, and then work through this process successfully. So that is really all I've got for this video, just a quick update on what's happening at Seritage, but quite a significant update on what's happening at Seritage, and I'm very keen to hear comments on this one down in the comment section below, because Seritage has for a long time, and I'm sure will continue to be, a very controversial stock. It was a very highly shorted stock. I think we probably saw a few of those short positions get closed overnight with a big run up in price, but nonetheless it remains controversial. There's sort of one camp that has a lot of faith in the asset values, and even further down that spectrum has a lot of faith in the potential redevelopments that Seritage were initially looking at as well. And there's sort of another camp that thinks that Seritage will continue to burn cash and steadily head towards zero, in which case if you for some reason had that view and own the shares, which is probably uncommon, but if you did, you would probably view this liquidation to get the cash out of there and kind of stop this madness. If that's your view, it's probably looking like a positive outcome and something you would vote in favor of here with going down the liquidation pathway. So like I say, that's all I've got for this one. If you did enjoy the video, be sure to hit like on the video and subscribe to the channel if you are new here, and I will see you in the next video. Cheers.